Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within corporate filings. And today we are looking at Strive Inc., and a very important report that tells us a lot about what happened after they acquired Semler Scientific. This one is packed with merger details, new leadership, and how the company is planning to manage its debt. Stick around as we break down what this really means for Strive. And before we dive in, if you are all about getting straight insights without the corporate jargon, hit that subscribe button. Also, we have a fantastic Discord community linked in the description below where we discuss these filings in real time. Alright, so what we have here is a Form 8K filing from Strive Incorporated. Now, usually 8Ks are for really big important stuff happening now that the company needs to tell everyone quickly. And what happened here on the 16th of January 2026 was a pretty big deal. The company announced the completion of a merger, a big acquisition that could really change things for them. They officially merged with Semler Scientific. This means Strive Inc. is now the parent company, and Semler Scientific is a subsidiary that means technically owned by Strive. This merger was actually planned quite a while back with an agreement signed in September 2025, and then some updates in December. Now, when companies merge, especially involving debt, there are often big changes to how existing debts are handled. So right after the merger, Strive and Semler Scientific, along with US Bank Trust Company as trustee, they entered into what is called a supplemental indenture. Think of an indenture like a contract for a loan or a bond, essentially outlining all the terms and conditions. This supplemental indenture changes some of those terms for Semler Scientific's outstanding 4.25% convertible senior notes due in 2030. These notes are a bit special because they are convertible. That means the people who hold these notes can choose to swap them for shares of the company's stock. Before the merger, if you held $1,000 worth of these notes, you could convert them into shares of Semler Scientific stock. Now, after the merger, those same notes can be converted into shares of Strive's Class A common stock. The terms of how this conversion happens have been adjusted because Strive is now the company whose stock you would receive. Strive's common stock is traded on the Nasdaq under the ticker symbol, as they also have another class of stock called Variable Rate Series Perpetual Preferred Stock, which trades under SATA, also on the Nasdaq. This merger is a significant step, and it's important to see how it impacts their existing financial obligations and their stock structure. So here is a key detail. After the merger, every share of Semler Scientific stock was converted into the right to get 21.05 shares of Strive common stock. This adjusted the conversion rate for those old Semler senior notes. Now it is set at 275.3887 shares of Strive stock for every $1,000 of the note's principal amount. They also added a guarantee from Strive for these notes. As of now, there is about $100 million worth of these notes still out there. These notes are considered unsecured, meaning there isn't specific collateral backing them up. They are due in August 2030 unless they are converted or paid back earlier. They carry a 4.25% interest rate, and interest is paid twice a year. The holders of these notes have specific conditions under which they can convert them into Strive stock. This is quite technical, but essentially if Strive's stock price goes up or down in certain ways, or if specific company events happen, holders might get a right to convert their notes. The daily volume weighted average price, also known as the daily VWAP, which is a key metric for valuing stock, will now be calculated based on Strive's stock price. This means the value of these convertible notes is now directly tied to how Strive's stock performs. And just to give you an idea of the potential dilution, if all these notes were converted, it would result in 34,423,480 shares of Strive common stock being issued. That's a substantial number, and something investors should definitely keep an eye on. Semler Scientific, the company that originally issued these notes, cannot redeem or buy them back before the 4th of August 2028. After that date, they can choose to redeem them if Strive's stock price has been performing well for a certain period. The redemption price will be the original principal amount plus any unpaid interest. Importantly, there is no sinking fund for these notes, which means there isn't a mandatory schedule for paying them down over time. Now, here is a crucial point for note holders. If Strive undergoes what is called a fundamental change, which includes things like a major merger or sale of assets, then note holders have the right to demand that Semler Scientific buy back their notes. This is a significant protection for bondholders, ensuring they don't get stuck with notes in a company that has undergone a drastic transformation they didn't agree to. The indenture also outlines events of default. These are situations like failing to pay interest or principal on time, or not complying with conversion obligations. There are also more serious defaults related to other debts exceeding a certain amount, something like $15 million, and of course bankruptcy or insolvency are also listed as events of default. Interestingly, if Semler Scientific fails to comply with certain reporting rules, instead of an immediate default, the note holder's sole remedy for the first year will be to receive extra interest. The interest rate increases over time during that first year. This suggests a bit of a grace period for minor reporting hiccups, but it will eventually escalate if not fixed. Now, shifting gears a bit, this filing also talks about some important changes to Strive's leadership structure. Avik Roy, who was a Class 2 director, resigned from the Strive Board of Directors and its committees to take on a new full-time role as Chief Strategy Officer for Strive. This is a common move where someone transitions from a board role to an executive position within the company. Following Mr. Roy's departure, Eric Semler, Mr. Semler, was appointed to the Strive Board of Directors. Mr. Semler has a strong background in investment and has served on the boards of other public companies. His expertise in capital allocation, digital assets, and corporate governance is noted as valuable for the Strive board. There were also elections and ratifications for other directors. Mahesh Ramakrishnan, Jonathan R. Messi, and James Alexander Lavish were elected as Class I directors. Their terms will last until the 2029 annual meeting. Sharish Jajodia, Eric Semler, and Pierre Rochard were confirmed as Class the Second directors, serving until the 2027 meeting. Matthew Cole, Ashia Sarkani, Brian Logan Bairn, and Benjamin Bartley Pham were confirmed as Class the Third directors, serving until the 2028 meeting. And importantly, the company also ratified and confirmed its 2026 Omnibus Equity Incentive Plan. This is basically their plan to issue stock options and other equity-based awards to employees and executives to incentivize them and align their interests with shareholders. The total number of shares available under this plan is quite large, and it includes automatic increases each year. This indicates they are planning for growth and want to use stock as a way to attract and retain talent. The company also issued a press release on the 16th of January 2026 to announce the completion of the merger, so the market was informed through a formal press release as well. Looking at the exhibits for this filing, Exhibit 4.1 is the original indenture from January 2025 related to Semler Scientific's notes, and Exhibit 4.2 is the supplemental indenture that we discussed today, dated the 16th of January 2026, which details the changes made due to the merger. So what does all this mean for Strive Inc? Moving forward, the acquisition of Semler Scientific is a major strategic move. It is clear Strive is integrating Semler's operations and finances. The key here is how they manage the debt assumed from Semler Scientific, especially those convertible notes. The potential for dilution from those notes is something investors will want to monitor closely. The leadership changes are also significant, particularly with the appointment of Mr. Semler to the board, bringing his investment and corporate governance experience. The approval of the new equity incentive plan suggests a focus on growth and incentivizing key personnel. Risks to watch include the successful integration of Semler Scientific into Strive's operations and the ongoing management of its debt obligations. Opportunities lie in leveraging Semler's assets and market position to drive Strive's overall growth and profitability. The company is essentially betting on this merger to propel them forward. Alright, that is our breakdown of Strive Inc. Its latest filing. What is your take on this merger and what it signals for the company's future? Do you think this acquisition will be a homer run or a risky play? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community linked in the description below for more in-depth discussions. Thanks for watching, and we will see you next time.